All right. Hey there. Good morning, everybody. A few minutes after 11 a.m. Central Standard Time here on, what is today? Today is Friday, December 8th, 2023. And man, oh man, coming at you live here from just north of Houston, Texas. I've got a, I've got a new standing desk. Those of you may know that I hurt my back recently. So I've got a new area in the office here and still trying to get it all together. I'm actually running on Wi-Fi here. So hopefully it's going to work all right. Whatever reason, my Ethernet cord went out as I moved things around. So yeah, good times, right? But anyway, yeah. So jobs report came out today. Man, oh man. So up, 199,000. That's above. I think they were expecting like 180,000. But even though it's surprised to the upside, remember it's still on a downward trend for the entire year. So overall, job growth is slowing, which is what the Fed wants to see. So last month we had some good inflation numbers. Well, we had good inflation numbers, and then we had PCE and whatnot, and everything just kind of looking strong here at the end of the year. But overall, the trend has continued to be down, and that's what's important to remember when it comes to the Fed. So I really don't think we have any reason to worry about any kind of decline or Fed rate raising at the moment. I think we're still good to continue going down. So yeah. I like that. All right. Yeah, if you're from Texas, you know Matthew McConaughey. He's from Texas, and that's an amazing line from an amazing movie from many moons ago. So, but anyway, like this stuff, we're gonna take a look at some charts here, guys, and kind of talk about what the what we may have, what may be of importance or not, with the jobs report today. Again, honestly, I don't feel like it's going to do anything significant. I think we had a knee-jerk reaction this morning to the news, as we usually do, and then it'll kind of sink in with everybody that that overall through the year, job growth has continued to decline, and that's what the Fed's looking for. They're not looking to just like completely strangle it. They're looking for a decent rate of decline, I guess is what I should say. And so far they're getting that. So I don't think there's anything going out there that says, hey, we need to worry about them coming in and raising rates, which in and of itself is actually good for the markets, right? Because if we don't have to worry about them raising rates, then guess what? We can get some risk. We can get some risk assets moving, right? Like stocks, like crypto. Non-believers still short, right? Or not getting in the market, even though we've rallied up here. What is that? 100 like that? Let me see here. We are up so far. Just over a year, guys, about 54 weeks. We're up around, so far I've been up around 188, almost 200%, guys. Almost 200%. This is the same chart. Those of you who've been following me for the last year, this is the same chart I've been using. Just kind of continuing it as it's gone up here. People ask, okay, does it, is it going to come down now? It has to come down. Remember, guys, if you ever find yourself saying, we haven't had a pullback yet, we need to have one, that's an emotional decision, right? That's an emotional reaction, because what's happening is you're nervous because price continues to rally, and you're scared that you're going to get caught longing it when it drops back down, right? Right? And so that's wholly an emotional take. Emotions are going to lose your money here, right? Now, I've been talking about this for a while. I said different things here at the beginning of last year. Well, at the end of last year, right? When we were down here, I was talking about first in June, about the start of accumulation. As we were making lower highs and lower lows, I said we could see a spring or a terminal shakeout here, which we got. Little range, pop back up. Kind of gave you this whole thing here. Again, the only thing I didn't call really correctly here was that it was two backups here. And that's just something that happens, right? Usually it's just one backup and then it's continuing, but it was two. That's fine. And ever since then, and again, I gave you targets down here. Said, if we break down, okay, here's our targets, but the likelihood is that this is going to be a flat, which is what it is here. And we were going to rally up. And then I said, when we break out here, I said the odd, we could pull back, but with this being such a long time, 6 to 7 months, the odds are we weren't going to pull back. And so people emotionally, thinking, okay, well, we need to pull back, waiting for it to pull back to 30 or 31 or something like that. Didn't get it, right? We started going there and all the way up here for a few weeks while this was consolidating here and kind of overlapping price action. everybody kept giving you every reason in the world why it had to come back down, right? And of course, I kept talking about this as reaccumulation on the rise here, and we were likely going to pop out. That's what we did. Now, what else have I talked about? So back here, when we were looking back here at the end of last year, beginning of this year, I talked about how we had to get above the 25,000 high here on this bearish market structure coming from the from the all-time high up here. And so breaking that would break that bearish market structure. And that was the first thing we had to do, right? And so guess what? We did. We got it. And I said, here's the idea. Either we would pop up through this mid-30s level or this 30,000 level here and then pull back and go, or we'd hit it, pull back, and then go through, right? And so what did we do? We hit it, pull back, hit it again, pull back, and then we broke out, and we've continued up. Again, when it comes to pivots, this is probably one of the greatest pieces of trading alpha I can give you guys here, because most people don't know this. No matter how many times I say this, most people don't know this, right? Here's the thing. When you have traditional pivots on here, right, and you come in sideways between the pivot and the R1, and you continue to rally up toward the R2, and you're not pulling back to the pivot, this is an incredibly impulsive bullish move here. And most of the time, you're going to hit at least the R4 and usually the R5 pivot. That's almost 50,000 on that R5 pivot. That's 49, 50,000, depending on what chart you're looking at. So this is a very aggressive move. We came in sideways and then just shot up through the R1, through the R2, into the R3. We've pulled back locally, looking to potentially rally up higher here, and again, either mark that R4 or R5. So on this chart, this is the Bitcoin USD chart on Bitstamp. The R4 pivots right here around 46, 450, 500, right around there. R5 pivots up here around 49,001, 200. The other thing here is my count. So I have a count here. My primary count says 1, 2, 1, 2. If this count is correct, this 3 here, 3 of this larger 3, has an expected target of right around 52,000. So if we're getting to 49.1, 49.2, we're $2,000 away from this target up here. So the odds are we would probably look at that target. Okay. Now the other possibility is that this is 1, 2, 3, 4, 5. I'm not a big fan. I know a lot of people use that because it's just easier to draw a 1, 2 than think about a 1, 2, 1, 2. It's possible 1, 2, 3, 4, and 5 here. That would give us the red count here, a 1 and a 2, and the 3 would actually be up here right around, gosh, I think it's right around 76,000 or so. 76,120 on this chart will be the red wave 3. Not that this would have to go right here straight up there, but just saying, this would be like wave 1 of that red wave 3 if it's going to do it. But until this count is disproven, we're going with this count, the 1, 2, 1, 2. All right. I got a lot of hell this last year from amateur traders coming out here and talking a bunch of smack behind fake names and fake animal, avatars. But it is what it is, guys. Been doing this a long time. Doesn't mean I'm always going to be right, but when we're seeing things, pay attention to what I'm saying. There's a reason I'm saying it, right? I'm doing this for free for y'all out here, so you should be paying attention, right? But there's a lot of emotional trading going on, and that's a big problem. Because again, those emotions are what are going to get you losing money quick, fast, and in a hurry here. How many of you guys have taken profit along the way here, even just since the breakout here, thinking it had to come back to 30? How many of you guys have done that? I'm willing to bet most of you, right? So, again, just because somebody got a big account with a lot of followers doesn't mean that they know what they're talking about. All right. I'm going to tell you guys something here. Most of the accounts that have, 300, 500,000, 700,000, most of those accounts that are doing TA are not doing a very good job of it. And they're very emotional still. And it just goes to show the lack of understanding of markets, right? And so you guys got to be careful of that, because it's hard. If you're new, it's hard to tell who out here knows what they're doing, who out here is kind of just blowing smoke up your rear end. So, it is what it is, right? Let me see here. Stats says I would not hate 50,000. I think there's a few. I was going to say we all wouldn't, but I think there's a few people that probably would. Maybe again missed the kind of run up here and kept taking, either didn't get in or took profits way too soon and kind of did that, right? Capital, and you were still waiting for 12K. Sarang, what's going on? He says, I only started to realize the importance of pivots after I joined your channel. I'm surprised that not more traders look at it. Well, yeah, it's just this thing, it's pivots are something I did for just pivots. I just traded pivots for like 2 years because I really wanted to learn them well. And I did that back around 2009 to 2011. And so these things like what I talked about earlier about the price moving through the pivots there, that's one of the things I learned by doing that for 2 years. When you guys focus, a lot of times, especially as new traders, you want to come in here, you want to put your money into everything that moves. You want to try everything out there. You're not focusing. Pick one thing, focus on it, get good at it, and then look at something else. And not just in trading, but in life, guys. Where you focus your attention, that's where you're going to make strides. That's where you're going to make progress, okay? So you have to focus. You have to be disciplined. You have to be consistent. You have to do all these things that people don't want to do. But you're not going to just come in here and put some money in and think you're going to be okay and make a lot of money in trading and just be fine. It's not going to happen. We're going to eat your lunch all day long, guys. Okay? How do I feel about the 5.3 theory that every new bull cycle return movement diminishes by 5.3? I mean, if that's what it's done up until now, well, you can expect it to do that until it doesn't anymore, right? In general, I try not to I try not to be too, how am I going to say this? When people say, okay, this thing happens every cycle, for most things, I usually don't give it a whole lot of thought, right? I don't worry about a whole lot because I just go in and trade the charts. When you say, okay, 5.3 theory, what you're getting is, okay, so now you're like emotionally attached to it. Now you're going, okay, now this has to happen. And what that means is when it starts not happening, you start creating situations, you start creating reasons, you start creating things in your head to keep from having to say, oh my God, it's not going to work, because you're so invested in it working, right? So if there's another bit of advice I can give you as traders is try not to do that. Maybe it does, maybe it doesn't, but guess what? We don't have to worry that it doesn't to get in here and trade and invest and make money, right? And I think that's the bigger point to take away from it, is that everybody's looking for this surefire way to know what price is going to do and whatnot. And really, there's no surefire way. One of the best things we can learn mostly about Bitcoin for the last few cycles has been, well, that bear market's a year long, usually comes in the fourth quarter. Price retraces, whatever retraces. It's different every time though, right? But after that, so far, price generally tends to retrace 61.8% of that bear market decline before you get a real kind of pullback. That said, this time is different than the other times, right? Because we had this, most of this year, at least half this year, a little bit over half this year has been spent sideways right here in this one area. We haven't had that before. The closest thing we had to that was 2014 or so, where we had it at the bottom like that. But look at what we have here. This is almost the same thing from June of 2022 until, well, we broke out here March of 23. So almost a year here, right? So we had that. We had the little bit of up, and then we had sideways for a long time again, and then up, and then sideways as we kind of overlap. So higher highs, higher lows, and then boom, pop. But most of our time has been sideways, guys, and we haven't had it quite like this at any other time previously. So when you see that, and you understand that markets generally move in a certain way, but when you see this, you go, okay, well, it looks like we're building up for a bigger push higher. And so that might throw off the whole idea of 5.3. Maybe. But again, you don't have to know that in order to trade successfully and to make a lot of money as a trader or investor, guys. But be careful when you do bite onto stuff like that, that you pay attention to your responses to it, because most of the time what we will do, especially if you're newer trading, you really don't know what you're doing. And it's not, again, not a jab, guys, just realistic. Right? Where are you in terms of your knowledge and your experience, right? But when you're at that lower level and you haven't really got the experience yet, you might find, if you pay attention, that you're really trying to grab onto these things that will kind of guarantee you your stuff. It'll guarantee you, or it feels like it'll guarantee you, right? But the problem, again, as I mentioned earlier, is when you do that, usually what happens then is that you become emotionally tied to that. And when you're emotionally tied to it, anytime it deviates from that, instead of going, oh, okay, well, I guess it's not working, you go, okay, let me find a reason, without even realizing you're doing this, let me find a reason to support why this has to keep happening. And that means you're going to miss a lot of movement. You're going to miss a lot of whatnot that's going on. You can think of Capo. Capo was looking at 12,000, right? And you can do his thing, whatever. It is what it is. But the fact that we've now rallied from 15.5 to 45,000, and he says, oh, I knew this is all fake and whatever, blah, 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 and he hasn't taken advantage of that. I'm going to be honest with you guys. It just tells me, as somebody who's done this, for so long professionally here, that, and what I mean by professionally is this is how I make my living, right? For almost 30 years now. And so when I see somebody go there, I really have to question it, because as traders, if we know something, we take advantage of it, because there isn't a whole lot that we ever actually know. You guys understand what I'm saying there? There is not a whole lot going on that we ever actually know as traders. We use our best guess based on our experience and our tools that we're using. And then we have validation and invalidation levels and proper risk management. And that's why we can continue to trade. Proper risk management. But if you know something and you're not taking advantage of it as it continues to would have made all this money for you, I'm going to call BS. I'm going to call BS, right? If he supposedly got it at 45,000 before it even hit the all-time high, which, 45,000, then it dropped, then it rallied back up, and then it came down, so it's a year and a half after he got out before it hit the bear market low. It's another year plus now. So you're going to tell me he's not trading this 2.5 years? Nonsense. But if he's not, it's because he's so beholden to this idea that it has to go to 12,000 that he can't let go of it. And he keeps making up reasons why for himself that it has to go down so he can't be wrong. See what I'm saying? So, again, not to knock on him so much, but, again, guys, if you're here, I always take it seriously that you're here. And I want to give you real information, real things to think about. What life's like really when you're trading to make a living. You don't just sit out like that for 2.5 years, especially if you know supposedly what's going on. You take advantage of that knowledge. It's asymmetric information. We wipe the market clean with that. So, Brian, yes, got the stand-up desk. Still trying to figure out the whole area, and I'll get it fixed up a little bit more this weekend, but I wanted to try it out here and see how it works. Let me see here. What's going on with you guys? You got any other questions? Shem's Farm says, I would prefer sideways for a while from here. 5.3 on this cycle is predicting a 400% move from 15 to 16K. I'm a holder over a trader. Just found it interesting in terms of the math behind BTC. Yeah. Like I said, could be, maybe not. But we're better off not be holding ourselves to that and then going, oh my God. Think about it this way. Let's say you do that and you're an investor. You said you're a holder here, right? And so you're thinking, oh my God, well, this is going to be a major cycle top. We're done for, a few years. I want to go ahead and lock in my profits and then buy again at the low, right? And so you get out at that 400% move, right? So 400% move, what are you talking about? Like 60,000? That's 300%. 75,000? So let's say you get out there, but price continues up 100,000, 130, 170. I mean, people got crazy numbers out there. 300,000. All of a sudden, what do you do then? You were so stuck on the 5.3 that you got out there, and then you can't figure out how to get back in because you keep thinking it's going to come back down. Again, kind of like Capo with his, has to go down to 12 or less or whatever. And he can't get in because he's always scared every time he's getting in, it's going to drop, right? So just that's the way I would think about it. I really wouldn't give a whole bunch of thought to those types of things because they tend to get you stuck on them emotionally. And then that really makes it difficult to pay attention to what's really going on, right? Yeah, Troy says, Troy brings up a great point here. He says, I agree, Chris. Price has never fallen below previous all-time highs. 20,000 was the last all-time high we had there in 2017. He said before this past bear market, when it did just that by falling to the 15,000 region, it works until it doesn't. Yeah, exactly. So, just something to think about, right? All right, guys. So this is Bitcoin. I think we continue up higher here again. I was talking about when we were sideways here above the EQ that we'd be looking to target the upper side of this triangle, or this this channel here. That's right there around 45 to 46,000, depending on where it gets in. So at least that. And again, looking at probably, ultimately, I don't know how quick, guys, but these are daily pivots here, so these will be good through the end of the month. So we got a long time we could continue to, till the end of the month before we do this. Maybe finish off with the Santa Claus rally along the way there the last, week or so of the year there. So that's what I'm thinking on there. Real quick here with the dollar DXY. Again, hitting targets, rallying back up. We could, come up if we break out above this area right here that we're at, this 104.285 area. It's possible that we could rally up here toward 106.17, but again, I believe this is 1 and this is going to be a 2, and if we get up there, and then we'll have a 3, 4, 5, and so we'll break down below wave B here, which is right around 99 and some change, and head down and lower. So again, to me, I think the dollar continues to weaken, and that'll take pressure off prices for risk assets, right? I brought this up before, guys. The monthly on the TLT, talked about should go long on it. If you're with me at TWC, man, we've been looking for the bottom for a long time here, waiting for it, and we finally got it here last month. Nice big bullish engulfing candle there. This month we're breaking out of the descending resistance. We've got capitulation volume down at the bottom there. Good volume falling back up. So I think there's a good chance TLT is bottomed here and we're heading up higher after doing this. Man, what a time though, right? But we'll see how it plays out overall. But right now, bullish divergence down here on the monthly, the bottom. We got a bullish crossing the Stochastic RSI at neutral, coming back up. RSI just breaking out, coming back up. So overall, I think we go higher on that as it is with TLT there. Ethereum, guys, what I was talking about. I've been talking about it forever. Remember, we were down here, and I talked about it being a wave 2 there. So again, like Bitcoin, a 1-2 kind of count. We got a nice breakout here. We've continued to push up, pulled back to the R1, pushed up into the R2. Overall, I think we continue to look higher. We've got a wave 3, 1, 2, 3 here at 4,700. It's almost the all-time high. So, that would be a wave 3 of wave 1, 2, 3. So you'll go 3, you'll go 4, you'll go 5, which will give us 1, 2, 3. You'll go 4, you'll go 5. Working on that there from that. So Ethereum still looking good, still looking. I mean, we could get it pulled back here, but ultimately, again, look at us going through the pivots here. Came in aggressively between the pivot and the R1, rallied up to the R2, pulled back the R1, breaking out above the R2. So generally, we'd look at the R4 or R5, and that'd get you, R5 will get you about $3,000. So quite potentially, by the end of the month, we could see that rally up to 3,000 there, keeping in there, right? So let me see here. So yeah, just just continues to look like overall that we're going to get. We're getting pullbacks along the way, but everybody was very bearish in this area. Remember? Oh my God, when it got rejected here, so bearish. I told y'all don't sleep on it. So don't sleep on it. So everybody's getting all bearish. That's what we're looking for when we're trying to, get the move higher. Here's all bearish down here, same way, all the way up through here. So we've got that, which gives us Ethereum Bitcoin, right? So this is the same chart we've been looking at for a year now. Looking at the idea that this was 4 here, and then this was 1, and looking at a 2 down here. And we had a couple of targets along the way, the usual 161.8, 70.5, 78.6. And as we were getting through there, I said, okay, well, this green, I think it's like the weekly demand structure there was where we were looking for. That's where we got, broke out, came back. Look at this great looking weekly candle right here, guys. All these wicks down here, getting a lot of buying, a lot of demand here. Wave 3 on Ethereum and Bitcoin here has a minimum expected target of 0.06509. So I think it looks good. Ascending triangle. I mean, it's there on the Ethereum for that. Really, it's just a 1-2, 1-2. It's just, consolidation up against resistance. So, I mean, if you want to say, okay, ascending triangle, you can. But for me, it's just, it was just most important to notice that it's a consolidation here, lower highs up toward that resistance before we get that breakout there. So I think it looks good. Ethereum, Bitcoin looks good. Bitcoin looks good here overall. By the way, if we pull back, I don't think we get 30. I think it stops mid-30s. I think that's about where we're at from now on. So if somebody's still sitting back there waiting for 30, I think they might only get like 34, maybe, on a pullback. Let's say the 1-2, 1-2 count is correct with the 3 there, and we get there. We'd be looking generally for a pullback. Oops. Yeah. We'd be looking 38.2. Pullback is 41.7. 50% would be 38.5. 38.5 makes a lot of sense. 38.2 is kind of middle of nowhere. So, if we're to hit that wave 3 up there, that pullback we should be expecting is a 38.5. And so, even let's say this is 1-2, and then this is going to be 1, right, up in this area. I mean, we're still looking 61.8, still 35,000, 35.3. So I don't think there's a lot of chance that we get below that 34 there on a pullback. So yeah. Let me see here. What else we got? Rivian's something I've been watching. I think I posted this here on Twitter not too long ago. We've rallied up into resistance above that daily pivot. I'm just looking for an impulsive breakout above here. 24.87 is easy target. If we get that, we should break out higher, and head up, I mean, at least here, probably to around $35 or so, but I think we continue up higher. I think that marks the bottom being in down here. So Rivian, looking for that one to kind of take off a bit if we can get this impulsive breakout here and then clear 24.87. The Dow is almost at the all-time high. Remember, I'm looking at this as a 1, 2, 3, 4, 5. And then 1, 2, 3, 4, 5. So that gives us an ABC. I've been talking about this forever and a day. Send this down a couple here. And so the question is, what's going on here? I mean, there's a few things it could be. You could maybe look at this as a 1 and a 2, 3. And then this would just be a flat right here. So go ABC down for A, B, C, or WXY up here for B, 1, 2, 3, 4, 5 for C. And I think that's probably at this point. That could be the best way to say it. The other way is this could be, instead of 1, 2, and 3, this could be just an A, B, and a C to get us a target at the all-time high, maybe a little bit higher, to give us a flat. So a flat looks like this. A flat goes A, B, C, A. In this case, it would be a flat here for B, and then a C, and then 1, 2, 3, 4, 5, usually down to where wave A is, down there. Definitely a possibility. If it's 3 down and 3 up, could be a triangle as well. A, B, and then ABC down for C, ABC up for D, ABC for E. We just don't know yet, guys. But the important thing is to note we are almost at the all-time high once more. And something I had said previously about this swing, this all-time high up here, I said if we were to get a breakout, that we'll probably get up to to 50,000. And so, you know, it's a pretty good one, right? Let's say this is wave 4 here, right? So whether it's a flat or a triangle or something, and just off that swing high, it's a minimal of 42,000. Likely it would be a blow off top and whatnot. But if this is just a 1-2 here, obviously we go up much higher with that, right? So it'd be like a 1 and a 2, and then this would be a 1. We'll get a 2, 3, 4, 5. Give us a 1, 2, 3, 4, 5 kind of thing going up, right? So there's a lot of different kind of counts it could be here because this is expected to be a fourth wave. So again, fourth wave could be done at the bottom, and we could have a 1 and a 2 and the next 3 heading up. We could be still working on wave 4 as an ABC, A, B, C for a flat, you know, 5 more down. And that would throw people off. You'd have everybody talking about how this has finally happened, everything they've been talking about this entire way here, about the big drop, the big resell, all this other stuff, right? And they would swear they were right here, and then you get the turnaround, boom, goes back up. So be ready for that. And of course, the other possibility, I don't like this as a triangle so much. This wave B is really stretched out here. But, you know, again, A, B, C, D, E. So we could go sideways effectively for the next year and then break out the year after, right? We'll just have to see what goes on here. A lot of different things that could be happening, but none of it seems to say that this was the all-time high or that this will be the high. 3 waves down suggests that whether we're doing a flat correction or a triangle or even that's done here, it should get up higher. Gold and silver. Look at gold here. Possibility that we got a 1-2, 1-2. Okay. The other possibility, maybe this is 1 up here at the top, and then this is some sort of ABC, right? So again, you get that flat 1, A, B, C is a flat, maybe a running flat, and then you rally up higher. But ultimately, we've got that new all-time high here. Futures, we hit 21.52 or so. We should ultimately have higher up to go with gold. And the same thing with silver. Silver looking at a 1-2 here. This looks like it's just 3. So if this is 3 down and this is 3 up, we could get 5 waves down toward the swing low here at $20, $21 area to kind of give us a flat correction here and then wave 3 up. But if it's done here, this could be just like on gold here, potentially 1-2, 1-2, head up higher. But, you know, again, ultimately looking at, you know, $40, $50, continuing up. I think the bottom's in on all that. Not a 1-2, 1-2 on the Dow. I mean, you know, I think you have to struggle more for a 1 here. I think it just works easier as an A, a B, and a C, or, you know, a W, an X, and a Y. Trying to get a 1-2 here, and it pulls back so deep, it looks much more like a running flat to me. You know, more I look at it here. Because this looks like 1, 2, 3, 4, 5 here, coming down on that. So yeah, I think it's probably a flat. Yeah, it's just one of those things where you have to kind of look at it, and then, you know, the more price action you get, the more you can look at it and kind of, okay, yeah, maybe this is actually what we're looking at. But this sideways here throws a lot of people off. So again, does look like an ABC, and then maybe a WXY, and then 1, 2, 3, 4, 5. And then because wave 2 ends before wave A, wave B broke out above where wave A began, gives us a running flat to head up higher there. So yeah. Let me see here. Time we got here. I got to go a little bit early here, guys, so I'm probably done soon. So your ARC. ARC's an interesting one. ARC's one I've talked about before. I think we're on wave 3 here. So again, this is a flat. It looks like a flat to me. ABC down, ABC up, 1, 2, 3, 4, 5. So that gives us a wave circle 3 target up here at 68.20. The accumulation looks good here. We had a V bottom into a reaccumulation, heading up. So yeah, I think again, wave 3 coming up there at least at 68.20. So that's a pretty good little rush. $20, almost $20 up from where we're at, which is about 50% almost. So yeah, that's what I'm kind of looking at there. Breaking out above wave B is going to add confidence to that count. So breaking out above 51.33. Yeah. Let me see here. What else did I have? Let's see here. Qs. Let's look at the Qs. I haven't looked at them in a bit. Yeah, so I've got this. Whoops. I've got this is 1, 2, 1, 2, 3, 4, 5 gives us 3. Minimum expected target of 423. But looking at this here, this might end up overextending here, or again with this being a wave 4, this could just end up wave B. If we get rejected without breaking out here and we come down below the daily pivot, I think we'll look for 5 down to finish out wave 4 as a flat before heading up. If we can break out higher though, I think minimum at least 423 for that wave 3, potentially higher up from that though. Oops. Well, what else do I have here? So this is RTY right here. That's the E-minis for Russell 2000 index futures. We've got what appears to be a long bit of accumulation here. We have just basically barely wicked below the range low here. And then bullish engulfing candle, signaling the rally up. 497 days of consolidation here. Well, maybe a little bit more than that here. At that bottom there, 500 plus days, rallying up. Looks like 1, 2, 3, probably 4 is a triangle. And either 5 or, we'll get a little bit higher up here, maybe the R2 pivot to get 5. And we'll pull back, but it'd be a 1, 2, get ready for 3. So 3 would be the breakout above here, give us the jump across the creek and head up higher there. But yeah, we had distribution here. Looks like we got a great bit of accumulation here. So I think we head up higher with that. So, you can get rotation out of the Magnificent 7 and some other large caps into like the RTY here, let me see here. What do we got with Mara? Oh, that's a great looking chart. Mara I've got is a off December of last year. I've got a 1 and a 2 breaking out. That gives us a minimum expected wave 3 up here at 145.60. So probably nearing the end of the wave 1 here. And then we'll pull back. Should stay above the pivot. We can make it just a bit higher up here. Yeah, 50% will get us around $12, $13 or so. But I could see us even pulling back here to $10. But ultimately, bottom should be in. And we should be, if you want to buy and hold, I think you're fine buying some here for that wave 3 at least. Because you're talking about 16 to 145, right? It's almost 10. It's almost 10 times. Oh, but you can do that. You can DCA a bit on the pullback to get you an overall lower entry if you wanted to do it that way. Mark, have a great day, bud. So yeah, I like Mara. It's nice and clean. It looks good. So yeah, we'll see if we can get that continue to follow up there. Monthly, we're just crossing bullishly here on Stochc RSI and RSI previous month. Weekly, yeah, it looks like a 1, 2. We'll get a 3, 4. We'll get a 5, and then maybe pull back a bit here. But again, like Bitcoin, you don't want to short it before you get confirmation that you should be shorting it. Don't try to short it early. Yeah. So, well, that's it, guys. I got to get out of here. I got something to do here in about 10 minutes. But hopefully, I've given you something to think about here in terms of just trading in general, the charts themselves as well. Remember, myself nor anybody else knows exactly what's going to happen. We can't guarantee what's going to happen, guys. Risk management, proper risk management is what it's all about as a trader. Okay, DGHI. All right, let me pull up DGHI real quick. That's it, though. Got to get out of here. What we got here? Oh, yeah, this is great. I've got this as a 1 flat correction. If you guys are wondering, the flat correction I was talking about earlier on the Dow, something like this. So you get your B up here and then your 5 down for your C. In this case, we had an inverse head and shoulders, rallied up, pulled back, retested the neckline as support. We've rallied up again. We're just now pulling back here, oversold on the daily. We've got, no, we don't have bullish divergence there. But ultimately would look for this area to maybe hold this pivot here and then rally up higher. I think 211 is a pretty easy target right now. But ultimately, again, 1, 2, and we're heading up higher after that for wave 3. So there you go. Okay, guys? All right, as always, remember, the only thing you control in the market is how much you lose. So please keep working on that risk management, guys. It is the only thing that's going to, separate you from the rest of everybody else, okay, as a trader. If you want to be a successful trader, you want to be consistently profitable over time, you have to master proper risk management. You can't do it anywhere else. You're not going to get lucky. You're not going to just throw it in and, oh, man, there it goes, whatever. It's proper risk management, guys, okay? All right, I hope you guys have an amazing weekend. Y'all take care, and I will see you guys, I guess, next Friday. Unless you're in TWC, of course. I'll see you guys there a little bit later. Take care.